All right, let's talk about cutting those losing trades or your losses so you do not, take on major drawdown. We want to prevent that. We don't want to blow our accounts. We don't want to start losing the hard-earned money that we put aside into savings to be able to start trading with. We don't want that to happen, okay? You work hard to build up an account to put into savings so you can take that money and put it into your brokerage account to be able to trade with, or maybe you're trading with some prop firm company, looking to pass an evaluation. You work hard to pass that evaluation. You work hard to get to the point where you can start taking withdrawals to possibly put into your personal or to start a personal account. But look, stop taking on all the major drawdown. Cut your losses early enough, and that is what this video is about. It's showing you, I've talked about this before in a few videos, how to get out of a trade soon enough, or at least how I get out of a trade, how I depict get out of a trade early enough so that so the market doesn't come back against me. Even if I'm cutting a winning trade early because it's coming back against me, maybe scared me out of the market. Look, there's another trade set up right around the corner. And you have to also understand limiting the number of trades that you take, meaning being patient and waiting for high probability setups, ones that absolutely make sense, ones that have multiple means of confluence. Those are the ones that are going to work out more so in your favor, and those are going to be the ones that you can hold on to as runners and allow those runners to become major winners for you, okay? So let's just look at yesterday's trading session and, looking at some examples of trade setups or opportunities in which we could have gotten to trades, trades that I actually took myself, probably not all of them, but I'm just showing you some examples of going back and looking in the market, all right? We're going to look at the higher base chart and then the lower base chart. I do not take my trades, and I'll stress this, I do not recommend and I do not take my trades right off the higher base chart. If you are trading from a higher base chart, similar to the way I trade, you must understand one thing. The market, there's going to be lots of storm that you may have to weather. You may get into a trade at the break and close of a candle off of a higher base chart, but that market can pull back 10, 15, possibly even 20 points before it even starts to move in your direction. So this is the purpose and the reason why moving down to a lower time frame base and looking for and executing on precise entry points off the lower base chart. Once you have confluence from a higher base chart, meaning you're depicting the market direction, then using your lower base chart to look for a setup to get into. If you're going to take a supply setup and you're looking to go short, the lower base chart gets you into a more precise entry point, one that is where you don't have lots of room, like on a higher base chart to which the market can kind of play around in between before it moves in your direction. Nobody wants to sit in, 10, 15, 20 point drawdown before the market goes in your direction. So let me show you this, okay? Pay close attention. This is a way to be able to cut your losses or cut your losing trades early enough, even if you find out or they end up being winners. Don't kick yourself in the rear end and get frustrated. Trust me, all right? It's best to cut them because if it comes back against your break-even points, a few points, maybe go ahead and cut it to protect your capital because you don't know. Even though you may have, like I say, a 7 or 8 point stop loss, why not cut it at maybe 2 or 3 points if it pulls past a certain area? I don't recommend, maybe 4 points or whatever it is. Whatever your thresh is, I'm not here to tell anyone how to trade specifically and where they should place everything at. Meaning, if you're comfortable with a 10 point stop loss or a 20 point stop loss, that's fine. That's on you. I'm not telling people what to do. I'm showing you where I place my stop loss at, okay? Where I recommend doing so because it helps you eliminate all that crazy drawdown and taking major losses. So let's jump into it, okay? That's enough rambling. Look, the market yesterday and the last few days have been doing what? Moving and breaking structure to the downside. And yes, we got a bullish pullback here where the market was, what was it doing here? It broke structure to the upside. It broke above here at 321, if you want to say that, or 322. Started breaking structure back to the upside. But you must also understand the market can do what? It can shift at any point, and which means if we start to break minor areas of structure back to the downside, you must start to think that the market can definitely start to, it's changing. The trend is changing. Even if it's short term, the tide is changing from a bullish momentum stance to a bearish once we start even breaking minor areas of structure back to the downside, even though the market is setting itself up into this, what I like to classify a kind of like a range within a bigger swing here. All this is internal structure, back to the upside and to the downside. So you'll see that definitely once it breaks structure below this area at 183, all this was pullbacks higher to break structure lower to the downside to break this major area structure down here at 17,183. But look, as the market made this bullish move to the downside, what did it do here moving back low? We started breaking structure to the downside as we broke below 471, and then it continued breaking structure lower. This right here was an area of supply, and I'm showing you specific areas or key areas where you could have taken trades from, because I want to walk you through where you could place your stop loss at, and how to get out of a trade early enough if it was to come back against you, showing you how to do so early enough so that you can get out of the trade to where you're not having to allow it to stop you out at 7 or 8 points. Okay, now it's up to you if you want to weather that storm and allow it for you to do a full-on stop. But if you got 10 contracts riding and you got an 8-point stop behind you, okay, imagine how much money you're going to lose if it goes back and stops you there. If you could get out the trade earlier and get out at 4 points, then you save half that loss. Okay, all right. You're not taking on as much drawdown, and then it stops you out, and then you lost 8 points of profit on 10 contracts. So, anyways, if the market's moving lower here and then it pulls back, we're looking for key areas once it broke below these areas broke below this area of structure right here. It broke structure to the downside, it pulled back, okay, and it pushed lower here. Now, when it came back to this area right here, we can see the market tested this area here. Yeah, it's a little small. It is an area of supply right here, and then it breaks lower. Then it pulls back to test higher areas. But this right here, what it did was when it came down here, it tested this area of demand right here. This was a demand area resting right here. Fresh zone, untested, okay? And then what does it do? It rejects it and pushes higher to test this area up here, okay? Right up here. You see this? It's a little area of supply resting right here. We've got the breaking structure below, pulls back, key area of supply right here. All right, so I'm going to move down to the lower time frame because we marked we're talking about this area of supply right here. Yes, this was a demand zone, but we're talking about this area of supply and moving down to a lower base chart, and then we're going to identify how we could have basically controlled the trade, and getting out of it so we don't take on any major drawdown, and how to cut that loss, okay? And basically cutting our losers before they start to become a problem for us, all right? So let's move down to the 12 range chart. So if you're first time viewer here in the channel, I'm talking about multi-chart confluence. The more confluence you have at a key zone, all right, or level, that's what's going to work out. Those type of trades are going to work out better for you, okay? So what we have here is a supply area off of a 60 range chart, okay? My higher base chart. Now I'm going to move down to my lower base chart because this is where we get into more of a precise entry point at a key area of supply, all right? I'm going to show you basically how the strategy works, but also where and how we can kind of, not say manipulate our stop loss, but where to put the stop at and how to prevent ourselves from taking on, again, drawdown, major drawdown. So moving down to the 12 range chart. And as you see, okay, now on the 12 range, we can see where the market has pulled back. That bigger box is that 60 range zone. Now, you can fine tune trade opportunities by even using a more zoomed in or scaled in approach. So if this is the 60 range zone right here, the higher, the bigger box, a bigger rectangle, then you can find a smaller area, okay, of supply within that zone off of the 12 range chart. So you're just kind of zooming things down, and basically what you're doing is you're narrowing things down as close as you can to find the best means of getting to the right trade at a better entry point, okay, but at a better entry point, because look, this was a break right here, structure to the downside. Okay, just imagine like that, and then the market comes back. So we're buying selling at an area of a premium area based on this break of structure to the downside. Now on the 12 range chart, we're going to find we're going to zoom in and get more of a scaled in approach at a area of supply off the 12 range chart. So we're just zooming down. We're trying to narrow things down, getting closer so we can get into more of a precise entry point. So the market, we find an area of supply off the 12 range as well. You can mark that, okay? The market comes back to it. At this point, all I'm doing now is just looking for the market to basically show me that it wants to continue running lower by just giving me a demand setup, Okay, I mean, excuse me, not demand setup. I'm sorry, guys. Supply setup, meaning where break structure and a area of supply is created. Okay, aggressive selling for those that don't know about supply or demand. Anyways, so the market taps into it. We get break lower. Okay, we get this breaker structure lower. Aggressive selling area here. It pulls back to this little small area of supply right here. Okay, and then once you get the break and close below here at 504 or 505, take the trade going short. If we go back to the higher base chart and look, what area are we aiming for? We're aiming for the lows down here. We're aiming for the lows, okay? Because now the market has shown us that it's starting to break minor areas of structure as it's pushing lower. It pulls back and taps into this area of supply resting right here. And then we move down to the lower base chart and found the area of supply by zooming in even more. But it pulls back here. We're going to take it back down here to fill in the rest of these areas that you see here. There's imbalances here that that the market needs to fill in as it's going to if it rejects this area. Now it comes back, and I'm aiming for this low down here because if you pay close attention to price action, you can almost determine and know that okay, the market really hasn't taken out any major area or minor area of structure back to the upside here. All right, it pulled back to this key area of supply right here. It's probably going to run lower, more than likely. So this is what I'm talking about by using multi-chart confluence and finding the best setups by using a higher base chart, zooming in off of a lower base chart, and then finding a better entry point. It helps you getting to more of a precise entry point to where you're not going to be having to worry about the market like having these big swings. That's what happens when people start trading from higher base charts, is that they got to put bigger stop losses, and you got to have bigger capital in your account to be able to sustain those type bigger moves, because the market can pull back significantly, 20, 30 points, or whatever it may be. This case here, and trading this right here, it helps you get into a more precise entry point. Not only that, it helps people who have smaller accounts, all right? Because you can scalp this way and pick up the points you need. So now, once we have identified a key area in which we can take our trade from, which could be right here, we can mark this little zone. All right, a little zone there. The market pulls back to that area. We get the break and close. All right, so I probably should have made it out a different color. But anyways, the market pulls back to this area right here. Okay, it rejects that area there. It breaks and closes below at 504 and a quarter or 3/4 or 505. Take the trade going short. Now you say, okay, well, where do I put my stop at? Now there's two places you can put your stop at. You can either put it at the back end of that area of supply right there, but what I like to do is to wherever the market, listen very closely, rejected off of that area of supply here, okay, that area of supply right there where we marked our supply zone. If it breaks, at the back end right here where it pulled back and then it rejected, so meaning the back end where it tapped that area of small area of supply right here, okay, and then where the candle broke and closed below, this would be right here. So basically at the back end of 510 and a quarter. All right, so you say, okay, well, what happens if I take that trade here and my stop is, so we get into the trade at say 505, okay, and then my stop is resting back here at 510. You give yourself a few points of wiggle room there, but I always talk about don't put it tick to tick because they love to come back, meaning they'll do this, they'll make this move right here. I'm talking about the institutions. They'll do this right here. The market will break and close below the candle, and then they'll try to come back, and they'll wick right above it a few ticks and stop you out, okay? Because they know people got to the trade right here. You see? So allow yourself to give yourself a few ticks or a couple points breathing room behind it. Maybe I'll say about 2 points above that, okay? So if you got in at 505 and you put your stop at 512 or 511, you're giving yourself there 6-7 points, stop loss. Now, do I stay into it if it comes back against me and allow it to stop me out? That is a choice you're going to have to make as a trader. But we have narrowed down and gotten more to a precise entry point by multiple means of confluence. And when we do this, because now we're moving on the higher base chart, the lower base chart, we waited for a supply setup here to show us the market wants to continue moving lower. That's so many means of confirmation there that the market on two charts are showing us that it wants to push lower. We're waiting for rejection here, the break and close. what's going to really prevent it from pushing lower? Now, what you could do if you are really tight, or should say, are really concerned about capital and you're really trading with a small account. So let's say, you got to trade here at 5.5, and this was your break-even point right here. I mean, it's not 5.5, 505, okay? And you don't want it to come back and stop you out at 6 or 7 points. Maybe, wherever the break-even point is at 505, 17,505, maybe put your 2 points, 3 points above that break-even point. So if it comes back against you 2 or 3 points, maybe close the position out. So instead of taking a 7-point loss, maybe you can just close out at 2 or 3 points, and that's all you took. So that helps you eliminate the amount of drawdowns you take. Or what you could do is, let's say you are in a winning run. It starts to move lower. Okay, and then what you notice is that it pulls back and closes, and I mean closes above one candle above another, meaning it pushes lower, and we get 2 bullish candles which close one after another on top of each other, then close the trade. So let's say this happened. We got this beautiful run right here, and this was our first bullish candle right here to the upside. Okay, and it comes back to, we're in at 505. It came all the way down to 92. All right, or yeah, say 93. It pulls back to 96, and then let's say the next trade, say for example, the next candle that closed was sitting up here at say 500. Okay, we still picked up and locked in profit. Okay, or closed our position out. We got in here at 505, like I said, but we closed out because we got 2 bullish close of a candle back at the 500. So we picked up 5 points there. You picked up something versus losing something is what I'm trying to say. Now, it's up to you. Do you want to wait and hold it through and leave your break-even point there where you got to trade it at 505 and see if it's going to continue running? And you can see it did. So these are the type of things that no one can tell someone, what to really do. You have to feel comfortable in your own skin with your own capital, with your own funds to determine how you're going to trade. Are you going to hold it through to see what's going to happen? Or are you going to allow it to come back and hit your break-even point and close the position? Or are you going to allow it to come back and hit your stop loss because you're comfortable there at the stop? Because sometimes they will come back here and test this area and then pushing lower. There's so many different factors that you're going to have to put in play. But I'm trying to show you how you can eliminate the drawdown is by using multiple chart confluence, moving down to a lower base chart, okay, and then looking for a more precise entry point in the direction of the flow of the market that the market's moving into, okay. Then you are setting yourself up for a better means of getting into a winning trade. But you can also, like I said, this helps you by doing that and putting in measures with a stop loss, okay. This helps you putting into a better stop loss placement, all right, or finding an area to get into or place a stop loss. 7 points right here, if you choose to do so. Break even right here where you got to trade, and then maybe put it at 2 or 3 is your mental stop where you can close the trade. If you're not comfortable, hey, this thing is coming back against me. Let me close the trade at 2 or 3 points above the break even and not allow it to finish running and take another 4 points from me. All right. So it's up to really I'm showing you how you can cut your trades early enough. 1, if it comes past your break even point. 2, you're in a winning position, and then it starts to close back above you, say 2 bullish candles. Close the position. You're still in profit. You just lived the seat of the trade. You picked up and made some money, so wait for the next setup. I'm showing you how you can do this, guys, to protect your own fund, your own capital. And by doing all this with a specific strategy of really being able to use more confluence and zero in or narrowing down at a more precise entry point of a trade area. Okay, we're not trading from that prevents us from having to trade from a higher base chart. And yeah, you see the moves, but you're going to have to weather the storm, and those storms could be 20, 30, 40 points or more sometimes. And unless you got the capital, and even if you do, who wants to take on that kind of drawdown? All right, or a major loss like that. So anyways, I'm just here to show you how I do it, how I protect and preserve my capital, how I get out of a trade quick enough. And I've talked about this in multiple videos before, but I'm doing it again because I know this is a major question or a major issue for a lot of people. They just have a hard time getting out of a trade thinking the market's going to turn around and it stops them out. One after another after another. But a lot of times it's all due to them not getting into the trade at the best or execute a trade at the best entry point as well. So I'm showing you how to do this, okay? Or at least how I do this, okay? But anyways, Appreciate each and every one of you tuning in on a daily basis, watching the videos. Thank you for doing so. Thank you for everyone that supports my efforts as an elite member. And if you're interested in becoming an elite channel supporter to receive the trade breakdowns where I go into detail about my trade entries specifically, it has helped lots of people, lots of traders out who are interested in the style and how I trade, the strategy and how I trade, and it helps them understand and how to get into better trade setups. So I highly recommend it, okay? If you are interested in becoming an elite member, you get the trade breakdowns, the video playlist, so you don't have to watch over 700 some videos on the channel. I hand selected those videos for you, the ones that I feel like cover the most, cover the best information topic wise and the strategy as to how I trade. So if you want to become an elite member, all it is $6.99 a month. Go down to the description portion of the video. You'll see a link that says become an elite member. Click on that. 2 tiers will pop up. You'll see one that says loyal channel supporter, but make sure to choose the one that says elite channel supporter or elite channel member for $6.99. Okay, and you get access to what I just talked about, the perks and rewards by doing so. And what you're doing is support my efforts as a content creator, and that's my means of giving something back to you. So that because I want to see people become successful. So by breaking things down, spending more time with you on the trade breakdowns and going more into detail, and it has helped. It's helped many individuals who are part of my Discord community, and they are finding success and making money now today. Okay, so it's up to you to choose so or not choose so, but I'm telling you that it has helped out. If you want to, if you're interested in becoming a Discord member, that's free. You can scroll down to the description portion of the video, and you can invite yourself into the Discord. On the Discord, all we really do is, we come together, or traders can come together. There's two channels there. One, the trading floor, where lots of traders post their screenshots of the trades, okay? And I do so just as well, so people can see the type of trades that I'm taking, as well as other traders as well, all right? The general chat is just specifically that's what it is. You can come over and ask questions about the future markets if you're interested, or you have questions, or maybe you're someone that's new and you're looking for, you have a certain question you want to ask. You can put it out there, and more likely someone's going to give you an answer, okay? But anyways, appreciate everyone tuning in and watching the videos. Thank you for doing so. It's the weekend, and I know it's kind of a wind down period, so kind of get energized for the next week ahead. We got another trading week ahead, and I wish everyone a very safe trading week ahead. But kind of back test this stuff for yourself, and start cutting your losers. Start cutting your losses early. Stop taking on all the drawdown, because all you're going to keep doing is blowing accounts left and right. The sooner that you're able to manage your trades, manage the amount of drawdown, the sooner you're going to find yourself in a better position to where you're green every day. That's the philosophy I live by, beating green every day. But it all comes with experience and knowing when to cut your trades early enough. Take care. I'll see everyone in the next one.